Good day to everyone. We welcome you to our classes. Today also we are going to deal in few MCQ questions. And after every question, we have introduced a post slide. If the students so wish, they can post their laptop, phone, etc. in order to try the answers themselves. And later on, they can resume and compare their answers with ours. Okay, now we will go to the question straight away. In financial statements, inventories are valued at the lower of cost and net realizable value in a statement of financial position. Which accounting concept is being applied? Duality, history cost, matching, and prudence. Before we answer this question, first we'll have to understand this is talking about statement of financial position. That means the balance sheet. So balance sheet, the assets are valued and the principle of valuing the inventory is given above. Now we will take this as an excuse and then we will try to learn something before we answer the question. First, there is dual aspect of concept, that is merely a double entry. Every entry has another corresponding entry. So this is what we call dual aspect of the entry. And if you see this chart, which you are already familiar, which is known as the golden rule of double entry, where there are 5 categories of accounts are given, which is basically all the categories of accounts. This can be reclassified slightly differently, but every account has a debit and a credit. So if you are very familiar with this, then we will understand this is what this duality is. Now we'll go back to the slide. There is a thing called matching principle. Matching principle means if you have taken a certain income into a period, the corresponding cost also must be taken. The expenses also must be taken. For an example, you are preparing a P&L for 12 months, then it will not be correct if you only take rent paid of 11 months, because the period you are trying to cover is 12 months, so it has to be for 12 months. Sometime, say for an example, you have taken in your sales, say 100 units, but then in your cost of sales, you can't take 95 units. It has to be 100. So this is what we call matching principle. Otherwise, they have the results of the trading or profit and loss account will be lopsided. It is not correct. I will go back to the historical value. Historical value means it is just the real cost of purchases. Real cost of purchases. And the prudence concept is, now when you recognize, when you foresee a sale or an income, you don't take that into account until it is really earned. But if you foresee a loss, impending loss, then you will immediately take into account, because providing for the loss at the earliest is the best, most intelligent way of taking decisions. Now we will go back to our question to see how we can answer. The first one is, they are talking about lower of cost or realizable value. They are not talking about double entry, so they are not duality. It is not talking about the historical cost alone. It is talking also about net realizable value. So this cannot be the answer. And there is no question about matching income and expenses on an equal footing. Then the fourth one is prudence. Now here, if you see the cost, say for an example, a cost of a product is 50. That is the historical cost, real cost of the product. But then the market has gone down and you foresee this item can be sold only for 75. That is the realizable value. So if you say if it is going to be 75, it means the cost that you are holding has lost 25 per unit. So if you have to give the realistic, real value of your asset, you can't give it at an inflated 100. It has to be the net 75, which is the present market value. So here the principle applied is prudence. Answer is D. I will go to the next question. Which statements describe advantage of computerized accounting system? It allows large amount of data to be stored. 2, mistakes in the entering data never made. The system can be installed within minimum cost. The trial balance always balances. Here it is basically a theoretical question, so we will answer it also accordingly. Now there is a myth or a misconception that computer is perfect and it can do everything. Now we will just go to the options given here to see whether it is, how far it is true. It allows large amount of data to be stored. This perhaps is possible because computer, even with 1 MB storage, you can have million bytes of details. Now there is no computer nowadays. You get less than 10 GB or more 100 GB. So the amount of space that is going to be taken by an accounting package can be very minimal. So it can store large amount of data, which is correct. The second one it says is mistake in entering the data never made. Now let us see that whether this statement will stand. For an example, all the data, now whatever, whether it is computerized accounting or normal accounting, the accounting cycle is the same. Only in computerized account, it is shortened and speedier. It can be faster, but the accounting cycle is the same. So as in all systems, whether it is manual or computerized, you will have to have your information. The basic is your source document. Through that only you are getting the information about a transaction or an event. Now, for an example, there is an invoice, let us say, which is the amount is say 8,700. So whoever is entering it in the computer, if they have made it instead of 8,700, if they enter it as 7,800, the computer cannot detect this. So like this, these type of errors can take place. But once you enter them, they will go through the process perfectly. But when you enter a wrong entry, if the data is wrong, this also can be wrong. Garbage in, garbage out. If you put right information, and the output also will be same. If you put a wrong information, that also will be the same. So this statement cannot be sustained. Then if you go to the next one, the system can be installed within minimum cost, which is not true. In a modern day, now say if it's a manual account, all what you need is few ledger books, cash book, petty cash book, journal entries, which can be hardly a person's pocket money. It could be 2,000, 3,000, or maybe within 5,000. But when it comes to packages, it is not so cheap. And it is not, if you say, depending on the package you select. Suppose you say if you just select a package where you have a standalone bookkeeping or accounting, that may cost something. But if you are taking an integrated package where the stock inventory is also included in that package, if you enter, say, any entry, for an example, anything related to stock, say if you are making a sale, it is not only will adjust the sales account, cost of sales account, it will go further into it, and it will even the number of units in the inventory also will be reduced. So this is an integrated system. These are fairly costly. So this statement also cannot be sustained. The next one, the trial balance always balances. This is true because whatever you enter, the rest of the process in a computerized accounting cannot make mistake. It can go to a wrong account if you are given the wrong details, but it cannot, the amounts cannot get mixed up. So whatever you put in, say if you put a debit entry, it will perfectly come as a credit entry. If you put a credit entry, it will come as a debit entry perfectly. So therefore, this statement is sustained. So in our explanation, if you see, number 1 and 4 are sustained, other 2 are rejected. So the answer is B, according to us. We'll go to the next question. What would be treated as part of the capital expenditure of the purchase of a building? Cost of purchases, installation of air conditioning needed for the machinery in building, insurance of building. Before we answer this question, there is a mentioning of capital expenditure. So we will take this opportunity to learn little about it. And then if you notice this one, there is a capital expenditure, meaning it's a long-term expenditure. It is mostly a purchase of an asset. And that the benefit of that asset should substantially cover several accounting periods, reporting periods. Then that is known as capital expenditure. Revenue expenditures are normally short-term expenditure that will perhaps last only for a particular year, the most. So it can, with a small prepayment, it can just tip into the next period also. But basically, it is a short-term expenditure. If you see this particular slide, it is not a preparation of ours. You just took it from the social media. Just now, if you see here, they are explaining a purchase of a car. That is a capital expenditure because the car is going to remain beneficial for several years. But then the next one they are showing is the repair, the maintenance is depicted by this graphic. So this is known as revenue expenditure. So now let us look at the question where they say cost of purchases of a building. That means the building is fairly a long-term asset, may go into several years. Therefore, obviously, this is a capital expenditure. The next one is installation of air conditioning needed for the machinery in building. So there is a building, and this is an improvement on the building, improvement on the asset. So the improvement also will last for a longer period. Suppose if the building has a lifetime of 20 years, depending on the air conditioning, it also can cover a part of the life of the building. So this is also a capital expenditure. Third one is insurance of the building. This is only a maintenance, sort of it is renewable every year. So the benefit of that insurance will last only for the insured period. If it is 1 year, it will only benefit for the 1 year. If one day is passed, the insurance is not valid. So this is a revenue expenditure. Therefore, the answer is 1 and 2, which is shown in the B, and this is perhaps the answer. We'll move into the next question. It says, the table shows part of the statement of financial position of business. Now here, I want to just tell before reading the question out to you, this presentation, keep a note of it. But this is what the some standards and some accepted accounting principle want to show the net current assets. There are two things here, the current assets, the net current assets or the fixed assets of the year, and the comparative figure of the previous year must be given. And in this account, definitely the original cost of the assets should be maintained, and the present net value, so obviously the accumulated depreciation, not the depreciation of the year, which is accumulated over a period of time, will have to be maintained. So remember that if you get a chance to present a fixed assets, this is the format that you have to use. Now we go back to the question. Other information for the financial year is as follows. Depreciation charge 40,000. New non-current assets purchased at cost is 105,000. Loss on sale of current non-current asset is 10,000. Students may try this question. By perusing the question, the students would have now realized this is talking about a disposal of fixed assets or a non-current asset. So in order to deal in disposal account, we need all the relevant information to the account. The relevant information are, one is the cost of the asset. The second one is accumulated depreciation of the assets, the sale proceed, and either it is a loss or profit. These information must come into a disposal account. But in this account, nothing is given directly. Now let us first look at the answer. Here now you see, we have attempted an answer where the disposal of non-current assets. There is a cost. We are showing it as 50,000. Where did we get it from? It is not there in the account. So if you see this one, the informations are there for us to arrive at that figure, but it is not clearly or openly given here. Now let us look at this one. They are talking about opening, that is 2,000. Year 2000, there is a non-current assets balance is 190,000. Since it's an asset account, it is always a debit balance. The closing balance is 245,000. The transaction that took place during the year is, they say, a new non-current asset was purchased at 105,000. So if you want to balance this account, there is a difference of 50,000. What could be the difference? This is the cost of the asset that was disposed. So this is how we arrived at, and this has been correctly entered in that account, that is debiting the cost account and crediting the disposal account. Crediting the cost account, debiting the disposal account. Similarly, we have said accumulated depreciation of 25,000. That again, if you see the same way, okay, the opening balance is given. Since it's a provision, it has to be a provision of an asset. Therefore, it has to be a credit balance. 75,000 opening balance, 90,000. These are all given in the sum. 75,000, 90,000. So the here again, depreciation charge for the year is also given in the question, which is 40,000. Then what is the difference? Now, when you want to balance it, there is a difference. Difference is 25,000. This obviously the accumulated depreciation in connection with the asset that was disposed. So having said this, now we'll go back to the answer that we have prepared. Now we have got the cost, we have got the depreciation. They have given the loss also. Now they want us to say at what price this, in order to come into this loss, what price this was sold. If you try to balance these details, there's a difference of 15,000. So that's obviously is the cash or the sales amount. So now we'll go back to the question again. Here, answer A should be the answer. Okay, we'll now go back to the next question. Business as a financial year end of 31st December. It purchased a motor vehicle on 1st January 17 for 24,000. The estimated useful life of the motor vehicle was 4 years. There is a residual value of motor vehicle at the end of 4 years. The business depreciates motor vehicles at 25% per annum using the reducing balance method. No depreciation is charged in the year of disposal. The motor vehicle was sold on 31st July for 12,000. What was the profit on the sale of motor vehicle? 4 options are given. This again, disposal of asset account, but here the emphasis is on the depreciation. Now here there are two things. The estimated useful life of the vehicle is 4 years. The residual value is 8,000. Now you know that, as you know, depreciation is made over the useful life of the asset to systematically write off the figure as depreciation. Now here there is a question. There is a residual value. Residual value means perhaps it could be the scrap value, or it may be the resale value, or it could be anything. So at the end of the day, a motor vehicle can realize as an asset or a scrap, even for the weight of a steel or iron, it will realize 8,000 is estimate. Now the question here is, now when you take usually the useful life of the depreciation, the asset, we deduct the residual value. Now our question is whether to do the depreciation for 24,000 or 8,000. In a straight line method, if you have a useful life of 4 years, maybe in this case it is at the rate of 25%. In four years' time, the value of the asset will be totally eliminated. So if you have a residual value, what we usually do is we reduce the residual value and we calculate the useful value of the asset as 16,000, and we provide depreciation for 4 years for that 16,000. Now here the question is, the depreciation method used is reducing balance. In a reducing balance, the disappearance of the value of asset is fairly impossible because it will keep on lagging for a very long time, much longer time than the life of assets. So therefore, in these accounts, the residual values are not taken into account. Now we'll go back to the answer. The motor vehicle, the cost will have to be transferred, which is 24,000. And the cash sales proceed, it is given in the question, which is 12,000. Now we have introduced a figure, accumulated depreciation, 13,875. So how did we get this? There's a working, if you see this, okay, in a reducing installment basis, this is how it is done. Okay, the cost of the vehicle on the year one, that is 2017, is 24,000. 25% is provided, and it becomes 80. In the next year, for the 18,000, the 25% is provided. It is 4,500. So like this is good. Now here on the year 2020, we have not provided any depreciation. Now you will have to see the asset have been sold on 31st July. So 1st January to 31st July, there is 7 months. So in a normal situation, we will have to provide for 7 months depreciation for the year 2020. But here they have very clearly stated no depreciation is charged in the year of disposal. So this is the policy of the company. So therefore, in keeping with that policy, we have not provided any depreciation. Therefore, the amount is 13,875. Just a hypothetical situation, if there is a depreciation figure in this question, it is not there. In a normal question, sometime for the 7 months, if you have calculated the depreciation here, what you have to notice is in the accumulated depreciation amount will increase. At the same time, depreciation account, which is not here, depreciation account, which is a revenue account, which will be charged the profit and loss account, will have whatever the amount that you are going to introduce it. Having said that, I will go back to the answer again. So if you put it, there is a difference. The difference is 1,875. So what it represents is definitely profit on disposal. Since it is a debit balance here, debit balance is entered here, automatically the next entry will be in profit and loss account as a credit entry. If it is a credit entry, it is profit. So since we are now dealt with all the questions, we are going to conclude the session. And if there is any further clarification, any doubts in the minds of the students, they can always call this number, contact us for further clarifications. Also, we have a YouTube channel, SL Account School. Usually what we do is we upload all these materials once again into YouTube for some time to remain. So the students can go back and they can, if they want to see it again or want to recheck anything, they can do it. So we have a request to the students is we want to promote this YouTube channel. So we want you to subscribe, share, and inform all your friends about the existence of this YouTube channel. The reason is, that will make more people to benefit. There is no money involvement. So we request your initiative to promote this. Thank you for the session, and we will meet you again.